So thank you. It's a great pleasure to be here. This is joint work with Marion Labore, who is here and happy to answer all of the tough questions that I can't. And John Turner, who unfortunately couldn't be here. Marion and I were talking during the break and said really our paper should have accompanied Jennifer and Eric's paper. We go, I think, into a little more detail on the institutional context of robo-advisors. And I'm going to focus on a couple of high points and also try to maybe problematize some of the general story about robo-advisors, because this paper is in part a recognition of the fact that robo-advisors are a potential solution to the complexities of financial decision-making, and in particular, complex financial decision-making in the retirement space. But at the same time, there's a lot we don't know about robo-advisors, exactly how they work, and how effective a solution they're going to be. So I want to just, highlight that as one of the themes of the paper and of my talk. So what are robo-advisors? We had a little bit about that earlier, but just let me be clear. When we talk about the majority of robo-advising as it's available today, we use the term advice. We talk about robo-advisors providing investment advice. But that's a legal concept. It's not necessarily a practical concept. By and large, what robo-advisors are doing is managing customer accounts. These are discretionary accounts. You hand your money over to the robo-advisor, and the robo-advisor decides what to do, when to trade, how to allocate the assets, whether to do tax harvesting, etc. And this is really, something that's welcomed by, the vast majority of retail investors who find themselves inadvertently, as the earlier panel was talking about, kind of tasked with the responsibility of managing their financial well-being. People don't want to do this, and they don't want somebody to give them advice on how to do this. They want someone to do it for them. And that's the space, that's the role that robo-advisors are going into. Now, what's distinctive about robo-advisors as opposed to traditional financial advisors is, number one, you access them through the internet, you access them via computer. Number two, they make their decisions by using computer algorithms. And number three, they have a variety of strategies that are uniform across their population, right? They are tailoring their management decisions to a limited number of inputs that the customer provides through online questionnaires and so forth, right? Now, as I said, they respond to the fact that financial decision-making is complex. There are a variety of issues. Academic research struggles at solving or coming to grips with the various issues. What is the appropriate of risk in a retirement portfolio at any particular stage in someone's life? How do you navigate tax issues, particularly in light of changes in the tax law, when or whether a portfolio should be rebalanced, and so forth. And this complexity is exacerbated by widespread financial illiteracy, something that our acting moderator has written about, more than almost anyone. And the industry response has a variety of products, not just robo-advice, that's designed to deal with some of these issues, right? So the whole idea of a standard mutual fund is to provide diversification rather than requiring investors to go in and select individual stocks and figure out, okay, how many stocks do I need in my portfolio? And if I buy IBM, AT&T, and Apple, is that a diversified portfolio, right? We don't expect retail investors to do that. We have mutual funds to do that for them. Asset allocation over time, how much risk tolerance my portfolio is supposed to have, right? We have target date funds that respond to that problem. So robo-advisors are just a piece of this overall industry response, and the industry response doesn't necessarily require fintech, right? A lot of these solutions have been around for a long time. right? Robo-advisors, as was identified in the earlier panel, provide a variety of services. They deal with portfolio construction. They deal with adjustments to the portfolio. They deal with things like reinvestment of dividends. Right? History, they haven't been around very long. Right? It's only 2010 that we see the beginning of robo-advisors. Wealthfront and Betterment were the initiators, the early entrants into this space. They build their services as providing two benefits: one, low cost, and two, a solution to complexity. You don't have to figure this out. We are going to do it for you. Right? A possible third attraction of robo-advisors, and this I think is something that we've been paying a lot more attention to recently, is not just low cost, but access to this kind of service for a lower strata of investors with small accounts. And this is possible not just because of the overall low costs, but because the manner in which the portfolio management services are delivered is scalable. Right? There isn't a big additional cost to providing services to an additional investor. Therefore, the robo-advisor, unlike the human advisor, cares less about the fact that this new investor coming in only has an account with assets of $500 or $1,000. That's not a burden. Right? Since 2010, we've seen huge growth of robo-advisors, but huge growth only on a relative basis. Robo-advisors are still a tiny portion of the industry, but it's not just standalone firms. As you heard on the earlier panel, the big banks, the big asset managers are now offering robo-advisors as well. We've seen the development of the hybrid model, which I'm sure we're going to talk about further today. And we've seen the spread of robo-advisors internationally. Marion is, of course, an expert on the spread of robo-advisors to Europe. And I've got one slide at the end, but you can direct a whole bunch of questions to Marion during the Q&A about robo-advisors in Europe. When I say they're only a tiny piece of the overall fintech or financial services industry, right? This graph, which I hope you can see, talks about or demonstrates investors' familiarity with robo-advisors. And as you can see, most investors know nothing at all about robo-advisors. So if you think, okay, this is the new thing that's going to solve our problem with small investors and information about investments and so forth, it's not happening quite yet. Robo-advisors, and I'm not going to spend any time here because I talked about it a little bit on the last panel, but they're regulated as financial advisors. They're subject to a variety of regulations, including the DOL's fiduciary rule. All right, so advantages and disadvantages of robo-advisors. Couple of key points here. One, as I said, they tend to be lower cost, but let's just keep in mind, this is the cost for account management. This is not the overall cost of the investment. A robo-advisor puts investors into investments that have their own fees, right? So this is a double layer. If you compare the cost of using a robo-advisor to the cost of putting your money into the Vanguard S&P 500 index fund, any amount that the robo-advisor charges you makes your overall investment more expensive, right? And the cost of the robo-advisor is a function of their fees as well as the fees of the underlying products. So a robo-advisor that puts investors into higher cost products, again relatively, is going to be more costly even if their account management fee is relatively low. Right? Two layers of costs, not necessarily transparent in all of the literature. Robo-advisors are convenient. You can access them at any time. You wake up at 2 in the morning and you're in a panic. Gee, I want to check my asset allocation. You can go online and figure out what's going on. You can't call up, most people can't call up their brokers at 2 in the morning and say, you know, I'm kind of worried. Can we talk this through? And this is, of course, particularly appealing for millennials who are both used to accessing information electronically and used to doing it at odd hours. Computers, as I said, are good with dealing with complexity. They're also good at realizing economies of scale. Transparency. Well, yes and no. We can figure out what robo-advisors are doing, but the underlying algorithms that robo-advisors use are not necessarily transparent, and the rationale behind those algorithms is even less transparent, and that's an issue that regulators are dealing with right now. Finally, traditionally, robo-advisors have offered less potential for conflicts of interest. In the beginning, Wealthfront, Betterment didn't have any proprietary products, right? They didn't have their mutual funds or their investment options. And so there wasn't the problem that you had with many human brokers where they got higher fees from recommending or selling certain products. As we've moved away from the standalone robo-advisor to the hybrid model and to robo-advisors at big investment firms, we see an increased potential for conflicts of interest. So that's not necessarily true anymore. Disadvantages of robo-advisors. Well, there's this thing called the warm body effect, right? And you're sitting here in Philadelphia today, you think, I get the warm body effect, right? It's almost 90 degrees out. But the warm body effect, there's some value in a complex financial world to having somebody to listen to you, somebody to understand, somebody to talk you down when there's a downturn in the market. Maybe millennials are good at kind of curling up with their computer, but a lot of people aren't. And the problem with the warm body effect is that it's pretty hard to quantify. It's pretty hard to know. But there are some empirical studies suggesting that access to a human can make people less risk averse, can make people less likely to overreact to market downturns, pulling their money out of the stock market at the bottom, and so forth. Number two, as I said, robo-advisors are managing customer accounts. They're not providing investor education. In contrast, a human advisor can also inform their customers, can tell them information about the different products, leading a customer to make not just more informed, but better decisions. More flexible approach to risk tolerance. Most robo-advisors rely on these standardized questionnaires. They ask you a couple of questions, they decide what your risk tolerance is. But as we heard on the first panel, it's not clear that risk preference is a stable preference. It's not clear that risk preference is not in part the product of financial illiteracy, irrationality, and so forth. And human advisors can help customers come to more informed decisions about the level of risk that they can and should bear. Scope of advice. A computer is only as good as the information that you put into it. Even if a computer program is excellent, it doesn't necessarily identify and draw out all of the information that's relevant to somebody's financial situation. A human advisor is more flexible and often better able to do that. So trends in robo-advising, and I'm going to finish up here because I'm almost out of time. As I said, there's a spread from standalone firms to incorporating robos into traditional asset managers. We're starting to see robos use more of their sponsors' products instead of third-party products. We're seeing greater product diversification. Now you can get more alternatives within your robo-advisor. And we're starting to use human advisors, use robos not in a hybrid model, but access robos to automate some of the information that they put together for their clients. Robos internationally, here's just an example. Sorry for the little crosshatches, which make the chart a little bit hard to read. But we see an extension of robo-advisors into a number of other countries. And we see a couple of things. Number one, size is still relatively small, right, on a relative basis. It's not a big part of the market. And number two, the robo fees tend, I think, to be a little bit higher in Europe than here. I don't think that's surprising. I think that asset management fees in general are higher in Europe. In conclusion, we're going to continue to see robo-advisors evolve. The debate about robos versus humans and advantages and disadvantages is ongoing, and I don't think we're going to see the end of regulation in this area. Thank you.
Thanks.